Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom. And talk about not wasting a single second of your time while we're here. Let's just go over what the last 1 minute of my 22-minute reasonable update was. All right, well, in that case, I would look for the liquidity sweep up at 28.3 to complete itself, and then see how it reacts off of that point. You do have some daily resistance levels at 28.690. If we do go up above that, do we maintain or hold at that level or reject? You have some rejection points. As it stands right now, the 5 minute is. So we were talking about coming up to the upside here, and sure enough we did. And we talked about the liquidity below. Do you maintain this level or reject? And sure enough, it rejected off of that liquidity sweep zone, did not make it above the daily resistance level, and came back down. So you would have been handsomely rewarded for your diligence, and possibly found yourself a nice little short with that 1, 2, 3 hits to the high. As we always talk about, wait for that 3-hit fatigue going into the FOMC hour of power here at the London close, which all the streamers like to claim as their prediction hour, and pontificate for 2 hours ad infinitum, ad nauseum. So let's go into the basic liquidity zones here, where we stand 12 hours, 2 12-hour candles later, as we come back to the potential SR flip zone of the 27.2 region. Let's go take a look at the high block. What does high block say in terms of the liquidity? What is high block? You say, well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. So let's do it now. Now I have to log in again. Sorry, 1 second. All right, we're back. All right, so going into the liquidation levels. Okay, so as we swept these highs, we talked about possibly coming back above to that 28.3 region, and then possibly fatiguing because you had some liquidity building down below. We gave you some ideas for that, and let's, as it stands right now, as we retrace back into the pools here, you got generated some more short interest to the tune of 200 million, 50 Xers here at 28.157. So could you come up and grab those 50 Xers that tried to casually and slyly put in a $200 million pool right there? Or are they going to continue lower into the pools below, the 132 million down below at 25X at 2707? So far sparse. If we zoom in here to see what's crack-a-lacking inside these things, inside these candles, let's go ahead and do that now. Oh, come on, don't play with me, please. So coming into the 105 million up here at 27,815, 100 Xers at that fair value gap there, and they took out this previous 100X as they retraced up and came back down further. Use that liquidity to make another leg down. ABC, 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 and it's just ABCs for days. The patterns are tertiary to the liquidity. Study the liquidity and the math and the momentum, and you don't need patterns. Pattern trading is for retail. All right, so you have $200 million up at the 50X pool here that you could retrace back into this fair value gap over here. You could easily come back to 28.157 at some stage here, but you are sparse in the liquidity to justify the move up from that 27K region. Let's go expand our vision to the higher time frame pools. Shout out to everyone here. CNC, welcome as always. Thank you. I mean, who has time to watch somebody for like 2 hours plus? I mean, I'm trying to do the live trading thing because it's what I would be doing anyway, but if you're just pontificating for 2 hours and reading some news that somebody can read themselves, it seems a little bit like holding somebody's hand too much. Gets a little bit old, don't you think? All right, so as we come into this region here, you got the 28.7 character still on the table for the 7-day, but the 7-day imbalance is now to the downside, coming down to that 26K region on the 7-day time frame, retracing into the liquidity as it fatigues out after taking out some of that imbalance on the 7-day. If we go to the monthly also had that imbalance we talked about up into that 27.6 region, and we talked about the 28.3 being the fatigue point as per our analysis here from yesterday. And sure enough, it came to that fatigue point, went slightly higher, did that extended M pattern, tried to get up to that 28.7 region for that $9.7 billion grab, and then faded from there. So as it stands right now on the monthly time frame, you have a huge imbalance down below sub 26K. Do you retrace down into it? The bull trap could be on, who knows? As you expand your vision to the 3-month and the 6-month, this is where the idea of a short comes to fruition, because you see all these pools sub 23K and beyond. That pump into the FOMC minutes was basically the bailout of the government, making the dollar look bad, so they gave a preemptive pump for BTC. Also, everyone thought there'd be some sort of bearish news, so they could just easily squeeze the shorts off of their sentiment. They can squeeze the sentiment. So as it seems down below here at 23.6, you got 261 million down below. Could we retrace into that after taking out some of the highs of the 28.5 region? Let's go into the monthly one more time and then go to the charts. All right, and let's go here. So it hit our pool to the T, created some tweezer tops, and then came back down. Let's go. Sorry, we're off by like a few hundred, but for the most part, we were talking about coming up to that region, fatiguing off of that or within this band. All right, so let's go ahead and turn on the ultimate and what you would have been seeing on the oscillators. Link in the description for more, momentummaster.info. Heads up display is on. You can go scroll down to features, toggle everything at your leisure at Bitcoin's bottom, as we saw it before we knew it was a bottom, with the rocket ships, with the stochastic array, or the trend cloud, or the baselines. These things come into prominence at different times. You can read about them if you choose. And here we go. Sorry, we're using the Momentum Master Lite, which we use for NASDAQ futures, but it can be used for BTC as well. But we have a little bit of a thing going with the classic suite, so we're going to use that. Okay, so what would you have been seeing as you came up into this region? Well, first, you would have been seeing us come up into that 28.3 region we mentioned, and started to see some cross down events of the baselines. What are the baselines? Well, they're your first sign of reversal. So you would have seen this cross down event. You could have got that alerted to your phone on the hourly time frame and watched the price slowly reject and fade beneath the baselines like water trickling down a mountain. And that momentum shift started to cascade into the higher time frames. So let's go see what the higher time frames look like. 4-hour just getting the cross down event now. In the next 33 minutes, does this 4-hour candle close and turn into this locked in cross down event as you see resistance at the adaptive moving average? What is the adaptive moving average, you say? Well, you can read about it. It's a sensitive yet stable moving average which factors out noise and displays an accurate place where the price will experience resistance or return to for support. And sure enough, return to for supposed support. You got a stop volume vector candle and then boom, drop beneath it. So is it support or resistance? As of this moment, looking like resistance on the 4-hour time frame as we come back to the cloud. And if you do a retrace of this entire little move up here and you do a pocket bounce, you would be down at the 618 here. This cloud, do we get a reaction at the cloud down here? You do have a pool and a vector within this candle that we could retrace into. This would be a deep retrace. Let's see how deep that would be. That would put you at the 786. I know some people like to play that these days for whatever reason. Must be the trendy fib level these days, the deep retrace, as the 618 gets too popular. And yeah, if we go to the 6 hour, we're just looking at the pure price action oscillation momentum shifts here on the trend cloud and everything in the baselines. We'll go into the oscillator in a minute. So the 6 hour is curving up here in a manner. You would have seen this kind of push up potential on the cloud cross up event here was in play. You're not yet with the cross down just yet, but you are flirting with that idea as you put in the close. When this candle closes, if it closes at this current level, it's going to bring some stochastic reset data with it, bringing these to a cross down potential. They're not yet at that official locked in potential yet. You have the cross up event of the 8 hour still apart on the baseline, still some saving grace potential on the 8 hour. And then if we go to the 12 also trying to support its best using the 12 hour baseline. You see how the fractal like nature of these baselines alone could give you a story, and how you get this cross down and it plays out, cross up and it plays out. So if you get a cross down of the 12 hour, you could be in store for some downside. So let's start our descent through the time frames as we go back to the daily now. Daily time frame cloud insinuated this shift. We had you at hello back here talking about this coming up, and we had the rocket ships coming out of here as well. So we had every single step of the journey laid out in stone, and no ups and down arrows for me. It was always one singular direction each time, and most of the time accurate. But we don't pontificate and we don't pat ourselves on the back. We move on and we move forward. We do not talk bigger than things are. It just is the way it is. So as we see on the daily, we do see this on this fractal like nature. You rise, retrace, continue to the upside off the cloud idea. We had this warning of this cross down events negated thereafter, talking about holding that cloud. KD lines looking to cross down here perhaps. Are you getting this retrace into the liquidity in order to continue, or are you getting this as a deeper trap being set after stopping out some of the shorts? Let's go deeper into the time frames of the 22. Once again, shout out to everyone here. The 22-hour time frame is showing some potential of crossing down here. This average of the Williams could come up slightly more here, and you could see this double top push idea. It sometimes gets pinned on the 22 here now, so it may not be an exact reset per se. 22 hasn't been as quick to catch the moves, but it does have you at hello for that point sometimes, so it's always good to take a look. 12 hour. So the 12 hour is starting to cross down here and potentially bring some downside with it. 28 minutes for this candle to close. Will it close beneath the baselines here? We are on Tuesday, October 3rd. The move for the week will present itself most likely today and tomorrow as they complement one another. So are we going to see false move Monday with the move to the upside being the false move, and Tuesday, Wednesday be the retrace down? Are we going to fall back down into this range and potentially lower? The 1 month and above now suggests that on the liquidity. If you go to the stochastic as well on the 12 hour, looking a little bit tired. 6 hour also looking to reset here, about to get a cross down event of the Williams. The Williams is at a point where it could cross down, but we have seen these points where it pushes up before it does that. the speed at which it retraced and the amount at which it retraced was a little bit more significant than this, so we could be seeing some more candles to the downside. If we look at the 4 hour, the 4 hour could be just getting started, getting the cross down event signal. As we said a moment ago, Williams cross down event is confirmed, so this duck-billed platypus looking beak opening up here could just open up the floodgates to momentum, and you're starting to get the potential of the leading MACD cross down here, the normalized MACD that is possibly going to cross down on you, bringing with it some downside potential. As of this moment in time, you are holding the super trend on the 4 hour. One level to watch would be this 27,367 level at the, let's go see what the liquidity suggests on the 1 minute. This is where you bring one of the other pillars into prominence, where you try to line it up with the confluence for the liquidity and the momentum together with the math, those three pillars of trading, and then you don't need these tea leaves of patterns. So if you look down into these candles, you can see that there's slightly more 3 billion imbalance to the longs here. Coming back down, there is a pool over here. There is 352 million of the 20x 25x nature at the bottom of that candle, so retracing all the way down to that 27,205 region to clear that 300 million would serve the interest of liquidity here and requite some of that imbalance. If we look at the monthly, you can't really see much because it's a monthly time frame. Let's go to the 7-day. Here we go, a little bit clearer picture. So if you look here, there's not so much up above and not even $1 billion in this range. So coming back down further and bleeding out into these pools of billions, basically like 30 billion down in that 26K. They could just slowly eat it all up. And yeah, going into the hourly, so it could be inducing longs the entire way down here. And of course you could just do 2 clicks here and get things in regression trends. These regression trends, these kind of oscillating waves, are where patterns move, but you know, the confirmation bias of putting a trend line on your chart and seeing it broken is only when you cherry pick the data does it work in your favor. Same with a lot of the ICT concepts. So if you go with this here, we're starting to see the hourly getting suppressed here as the Williams pours out its momentum. This is a precursor, prelude, if you will, of what could happen on the 4 hours. So the 4 hour right now is at this position, and this is at this position. So we could see the 4 hour suppressed by the Williams, and the 6 hour and the 12 hour that are also overbought now, as we had 6 time frames overbought here on the 4 hour here. You got an alert to your phone saying 6 time frames overbought on Momentum Master. If you use the dynamic alert system, congrats to you, you would have gotten that overbought signal. And you could have seen that lock in on the 4 hour, which is a very significant thing, and it also locked in on the hourly here, got an extended M and then fatigued off that, and now we're seeing this potential suppression of the hourly. Most likely you're going to get a slight bounce of the 15-minute at some point to retrace into some liquidity and or induce some longs. Right now you're having a cross up event of the 15-minute, so a 15-minute play right here. Does this 15-minute play come up into the 100xers right now? Are we getting the strength to come up to 27,815? 27,815 would bring you here. So up in this candle here, there is a fair value gap better known as a liquidity pool, a liquidity void. There are multiple names, multiple ways to skin a cat, and this cat has a name of 100x $100 million, $105 million to be exact. So they could come back into this, fade off that, and potentially go lower if you're in the mood for some sort of 15-minute scalp into the daily candle close / rejection of this weighted moving average and cloud, which is pretty thick here. The bearish super trend holding so far, so the bearish super trend also at the 856 level. So even if you don't have high block, you can assume that's where a rejection could occur. And so you could have this 15-minute into the hourly play here. We'll see. Does it retrace into this candle and go lower? So we have this other pool down below here. This one is at 27,205, 352 million. 27,205 will put you about here. There you go. So inside this little candle is 350 million, which pushed it up there. So they could come up to here to go down to here, and you're just basically making this regression trend to the downside. So coming back up somewhere in there, if you even take this to there, it makes sense to basically break that trend, remain in that channel. Okay, so the curvature of the hourly here also suggesting that you could bearishly retest this idea. You come up to here, possibly reject, and come down to here as it stands right now. If we look at the dollar, let's go into the dollar here. Dollar breaking into new territories here as we got that daily support bounce off of these levels, and we're starting to retrace up into the liquidity pools in the external liquidity range, just continually going higher as we find new bullish order blocks. On NASDAQ futures, yesterday we played in the chop and we got 11 out of 14. Got a little bit chopped up, gave some of it back from the pre-market, but towards the end of the live we talked about making a surge up to the 15K. As we bid everyone adieu, we did take a long position here off the cloud kiss after the live and took it for 145 ticks and made back all our losses to the Momentum Master Group. Other people within that group also took that and took their profit. All right, so also we had this cool little rejection off the 786 level of the bullish kind, and then we fatigued out and came back down and bounced off the 236, and we're just meandering between those levels, considering what to do next. All right, we'll clear this after the live, but basically going to total. Getting those 6 time frames overbought, 7 time frames overbought. When you get those 6s and those 7s, I would not ignore those. Those are fairly telling of something, and sure enough, boom, we came back down again. We're coming back to the adaptive on the 15 here. Cloud on the hourly also shifting in a manner, doing that bearish retest thing that we were talking about, possibly coming lower. You got this angle here. Huh? Okay, and if we look at total 3, very much the same, already happening. Interesting, so it's giving you an insinuation what is to come for total already turning purple in advance. The altcoins bruised and battered as the exchanges lose credibility, and YouTubers who wave, other stuff in public, their drama in public, also losing credibility, unfortunately. Don't like to wallow in somebody else's crapulence, but yeah, a lot of FUD to go around for everyone. And yeah, that's why these altcoins are kind of like garbage in my opinion. But yeah, I haven't really seen anything come to fruition. Like, even just look at Gala, for example. What has Gala done since it came out? Like, literally, what project has it seen to fruition in the 2+ years it's been out? How about HBAR? How about any of them, other than just a lot of hot air, blah 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 blah? So it's just, if you're in it for just the scalp, by all means, but the whole accumulation thing is just a lot of gobbledygook, in my humble opinion. If you go to the USDT dominance, you had a previous rise up of the USDT, suggesting people get knocked out into USDT. Now they could be coming back, as we said, to retest and continue as it comes back to that cloud, as we generally do. We break the cloud, come back, retest, continue. So watch for this point for it potentially dropping in the market. Does it retest off the cloud? The insinuation of the cloud does suggest that. Bitcoin dominance. This is how you do this in like 20 minutes. It's so easy when you don't have fake patterns to look at. And then you got the momentum sliding down the mountain here on Bitcoin dominance. You're holding the super trend and you could bounce up. So if you get the USDT going up while the Bitcoin dominance goes up, this suggests Bitcoin dropping, because it causes the paralysis of the alts to continue to bleed. If we look at crypto bubbles, a lot of red across the board. This random coin, which I don't know, having some 20% gains for whatever reason, and some other ones that I don't know. But overall, everything bleeding as BTC takes a bit of a nosebleed here. So do you see this kind of rise up to bearishly retest the cloud and continue further down, or not? That is the question. So watch what the 15-minute gives you or doesn't after this plays out on a Tuesday, October 3rd. And that is my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you for the NQ Futures live trading